You're listening to Classic Business, brought to you by the insurer that pays more money in claims than any other, Santam. Insurance good and proper. Accéntuate, the JSE-listed group serving the construction, chemicals, infrastructure and water treatment markets in the country, announced an 11% decline in headline earnings per share for the year. That's to some 3.97 cents per share. It was a year marked by 4 distinctly different quarters of performance for the group, and I'm joined now by CEO Fred Platt. Fred, welcome.
Thank you very much.
Despite this being one of the most challenging periods in the group's history, with all the strike action, with things like load shedding and the slow growth economy, on a normalised earnings level, your earnings per share actually were up by 27%. So considering the headwinds, a quite creditable performance actually.
Yeah, I think under the circumstances, all the businesses within Accéntuate, that being the flooring business, Floorworks, the chemical business, Suffolk, as well as the fledgling water business, I think it's shown their resilience under what could only be described a pretty challenging period.
Now, looking back over the year, there was also an issue with some shareholder activists who were trying to get a seat on the board. They've now sold out to a private equity firm, and you must be happy to be able to put that behind you and get down to the knitting of running the business.
Absolutely. I think under the current circumstances, we are operating within a difficult macroeconomic environment. And the alignment between the vision of the organization and the management and the shareholders, I think, is critical. Where we are now, we certainly have that, and I think it puts us in a position where we can now start building and creating some real value for our shareholders.
Now, looking at the divisional performance of the group, and let's start with your flooring division. It's still the bulk of the contribution to group revenue, just under 80%, and revenue was up there by almost 5%, but your margins are under huge pressure here, due largely to that metal industry strike that stopped production at your East London plant for a month. I mean, what are you putting in place to try and secure better industrial relations moving forward? I know it's very difficult in this environment.
Yeah, I think particularly challenging when the issues relate to almost macro political issues rather than to shop level. So we're in a situation where industrial relations at the plant level is sound, but we are very often the victim of a bigger political game that is being played.
And I think therein lies the lesson for the political leadership in how that can impact on businesses on the ground when those political games are played. And then we've got to add into that heady brew the fact that you've been impacted by load shedding as well. How badly have you been impacted by load shedding, which thankfully we seem to be getting a handle on, but I'm touching all the wood around me.
Well, from your lips to ears. We were particularly badly hit by load shedding during the period, in that we're a continuous manufacturing process and relatively energy dependent, and we had a situation where 2 hours of load shedding would result in a minimum of 6 to 7 hours downtime, and that for a period certainly until we could really find some mechanisms to deal with it, had a hugely detrimental impact and impacted our margins, as you say, in addition to the strike which kicked off the innings for us.
Are you comfortable that if we should return to a situation where load shedding is once again the norm rather than the exception, that you've got processes in place to better manage any impact from load shedding going forward?
I think we got processes in place to manage the impact. I don't think that we finally have all the processes to eliminate the effect of load shedding. We are looking as an organization is to find sustainable solutions to our energy provision, as opposed to just looking at it from a load shedding perspective. But what we need to do, and I think what we started doing quite effectively towards the end, is managing the negative impact to the best of our ability.
Now, we've got a sustainability focus all of this week as we head into the Sustainability Summit at the JSE tomorrow. We had the Sustainable Development Goals, which really dominated the headlines from Friday through the weekend. And you've got an environmental solutions business which comprises the SAFIC operations. That contributed the remaining 21% of group revenue. And despite revenue and margin pressure here, you still managed to double profit thanks to your cost containment here. Tell me a little bit more about the SAFIC businesses, because what really interests me is the chemicals and water treatment processes. We know in South Africa we're a water scarce country, and surely this must offer some exciting growth potential.
Yeah, I think the business, which has been around for the last 33 odd years, has traditionally been focused into the detergent market and to a large degree into the flooring supply. So we would manufacture the screeds, the adhesives, and the maintenance products for the floors. But our recent expansion, and really by demand, because we understand the impact of the water crisis or looming water crisis, we've done a joint venture with India's leading water treatment company, which puts us in a very unique position, not only to provide chemical water solutions, but also to look at the provision of resins as well as equipment. But I think more critically, coming up with designs in terms of providing zero discharge solutions to industry, which will have a major impact on the water usage.
Now, that is very important, and it fits within that strategy that you've been pursuing at SAFIC to focus on sustainable recurring businesses, as well as increasing the range of your specialized chemical products that are utilized by industry. So that ion exchange JV is very exciting. What are your prospects, considering that most commentators are in unanimity that the outlook for the South African economy, unfortunately, is not going to improve over the next few years, and a lot of your eggs are in this market?
Yeah, I think that, obviously we're still seeing pockets of opportunity within the market, the water sector being one, as the value of water increases, so the opportunities will increase not only in terms of the infrastructure provision, but certainly in the areas of reuse and recycling of our water resources. But we also, with the deteriorating currency, obviously other markets become far more attractive. And we are a primary manufacturer, and so we are tentatively glancing at some markets which previously maybe we wouldn't have looked at.
Wow, for once we finally see some of that weak rand dividend coming through. I mean, at what levels do those markets remain attractive to you, Fred?
I think at current levels they're hugely attractive, but even if it had to retreat slightly, they would remain attractive, and obviously you get the double impact, because the volume through the factory then also makes you more competitive both locally as well as internationally, and certainly some of these markets can provide sizable values at the levels and slightly below the levels where we are in terms of the currency at the moment.
Fred, before I let you go, just to understand that, would that be then manufacturing for export into those markets, and therefore how much would security of power supply feed into that strategy?
Well, clearly, we are looking at exporting, and as I say, we are looking at exporting potentially into markets which traditionally which would not have looked at. However, security in terms of energy becomes critical, and hence our focus on not only providing or not only bridging load shedding, but providing possibly sustainable energy solutions to our businesses, which allows us to, at least to some degree, contract out of the current grid.
Well, that is very exciting news for shareholders indeed. That was Accéntuate CEO Fred Platt with the group's full year results here on Classic Business, which is brought to you by the insurer that pays more money in claims than any other, Santam. Insurance good and proper.